Hey everyone, good morning. Well, good
Morning,
morning.
Dima. Episode 5.
It's
You
great.
ex- you
Great.
excited?
Yeah. We've whole week now of doing
Yeah.
the early morning pre-market show. Um, should we do the
Well,
disclaimer really quick
well,
and
yeah,
thank
we'll
everyone?
go. We'll go and do the disclaimer. We'll let people come on. Hi, everyone. Let me know that you can hear us. My name is Will McBride, and obviously that's Dmitry, King Chameleon, which
Hey
is
everyone, good
always
morning.
it's always great to see him in the morning. So before we get started, anything you want to ask Dmitry or send to me, just put it in the chat, and I'll get the questions to him as we move through the show. All right, let's get started with that disclaimer, Dima.
Okay. Yeah, just pop it up and remember everybody, we're not investment advisors. We're not broker dealers. We're just sharing ideas. If you need professional advice, and Will, can you pop that up or I'm still sharing my screen?
Yeah, it shows it's sharing. You don't see it? I'll stop the share.
Yeah,
Why don't you stop sharing?
Okay. Yep.
All right, I'm going to
And
bring it back up again.
if you guys need any professional advice, then talk to your broker or seek an investment advisor. There's the disclaimer. Again, thanks everybody for joining us. And I think then that's pretty good. We'll just come back to my screen. There's a couple things worth mentioning. I think the EU, it looks like they passed a stimulus plan now, some like 800 billion. America, we're talking about adding another stimulus plan, maybe another $1 trillion. So we're kind of in this inflation-driven economy right now. Seems like it's also impacting the stock prices, and what we have going is more money keeps coming into the system. It seems like due to the coronavirus, we're getting slowed down in manufacturing, goods and services. So leading right now, I think, into inflation pressures. And I don't know if you've noticed it, Will, but I have friends already telling me they've been trying to order certain things, maybe not like essential things, and they're seeing either things out of stock or delays, 2-week delays in deliveries. So I do think you're starting to even see shortages in certain places. Have you heard?
Let me give you my experience. I don't know if anyone's been to a Lowe's or Home Depot or even an independent lumber yard to try to get lumber. There is literally no lumber in the aisles.
Yeah.
It's incredible.
Yeah. And I know some small business owners, in um, furniture and dealing with the housing market, and they're also telling me the same thing, that it's really hard now. There's shortages or delays in things that they haven't experienced in the past. So we'll see how that plays out, but it does feel like that we're seeing some inflation starting to kick in certain areas. At least that's how it feels. Another thing, I think tomorrow we're going to see some housing numbers, which are we're going to see mortgage applications. I think existing home sales, new home sales on Friday. To me, that part of the economy is open right now. People are active, and I think that also shows some confidence in the economy because it's big ticket items, purchases. I think that has more weight than a survey. So we'll see how that goes. But that's, I think, coming out tomorrow. 2 numbers, Friday another number. Now let's just go to the pre-market as usual. We'll just go through a few pre-market movers, look at some earnings coming up, maybe do a few analysis on stops and take some questions. So here to this morning, I'm just looking at some stuff that are popping. These are kind of the small cap market stocks. IMRN, I see that reported some news with potential antibodies in COVID-19. There's some people who really like to go look at those smaller cap stocks when they're popping for momentum plays. Here's one. I think this is also some biotech coming out. I'm going to really just see what some of the big names, if there are any higher market cap stocks moving. We see IBM that reported earnings right now. That's up 2.5%. We see that over here. Philip Morris up 3.5%. Alibaba up 3.5%. HSBC up 3%. So some big cap stock movers here. Let's just take a look right now at IBM. That up 5.3%. Let's just see how that compares to historical gaps. So we see that usually, it tended to gap down more often than not. So this is pretty good. We see that the gap up moves, it's been as high as 6.6%, 7.2%, October 17, 2017. And at least from a historical perspective, it looks like that after the opening, it tended to be stronger. Looks like at least from the open to the high, the stretch on average was 2.2% versus the low of negative 1.1%. The drift from the open to the close, 64% of the time, it drifted higher from the opening price to the closing price that same day of earnings release. Coming out of earnings, following earnings, the day, we have here 1 day, 2 day, 3 day, 1 week, 2 weeks. It looks like a mixed bag. Really, probably to me, it just looks like it was a little bit weaker to unchanged day after the earnings releases. Let's just head out because I wanted to leave some more time for some. Actually, let's take a look here how the earnings have been so far. So this here is a list of in the last 20 days what tended to happen to stocks that gapped either up or down after their earnings release. So I think we didn't do this analysis in a couple of days. So let's just see what's been happening on a gap up stocks that have reported earnings. So these are stocks that have reported earnings gapped up on the day. What happened to them after the open? So this up here, that's our control group. So versus all of them, 48% of the stocks that gapped up in the morning continued higher in the first half hour versus 51% that dropped. To the close of the day, 44% continued higher versus 56% that dropped from the opening price for the average return negative 4%, negative 0.4%, sorry. This compares to the earnings that gapped higher. 43% of them continued to rise in that first half hour, was 57% that gave back. But on average, those gains were 2.7%. So you see some of them really added to the gains over here. Actually, let's go to the higher market cap stocks. Let's say over 10 billion. Okay, so this is over 10 billion. 37% that gap higher continued to rise to the close for 63% that retreated for negative 0.7% drop. So that's just giving you from the last 20 days what the stocks tended to do that gapped up on earnings news. We might come back to this, but let's come up to earnings. Let's see what's on the horizon for earnings. So these are earnings that are coming up in the next 2 weeks. And let's just set that, like to look at from stocks that tend to trade a little bit of options to see what the markets are expecting. So this is a filter of stocks that trade on average more than 5,000 contracts or more. So we see here's that's Snap. That's coming up with earnings today after the market close. Right now, the implied move is 13.9%. And that compares to, so remember that the 13.9%, that's the expected move from the options market up or down in either direction. We're talking about magnitude of the move. And that compares to, on average, in the last 4 quarters, the absolute move was 15.2%. So right now the markets are expecting a little bit more muted. And we see here the high and low range. It's moved as much as 36.7% and as low as 5.9% in the last 4 quarters. If we compare it to the last 12 quarters, that absolute average move is 18.3%. First, today's expected 13.9%. So that's what here is right now. It's expecting 4.4% underestimating versus the historical average. And we see here in the last 12 quarters, it's moved as much as 47.6%. So really high moves there versus as low as 5.9%. Another one, UAL. So now we're going into the airlines. We're seeing here United Airlines, that's reporting today after it closed. Expected move is 10.2%. And that compares with the historical average move up or down. Last 4 quarters, 4%. It's moved as high as 10%, as low as 0.9%. And in the last 12 quarters, the average absolute move was 6.3%, with the with the maximum of 12.1% and low 0.9%. So that kind of gives you the range of historical moves, actual historical moves versus today's expected moves. Over here, I see Tesla, that's expecting what, 15% move. That's coming up as well. And that's compared to historical 4-quarter average 11% and 12-quarter average of 8.5%. But Tesla's also been in the news and has been really volatile lately. So we'll see how that works out. Also, Microsoft coming up, that's expecting 5% move versus historical 4-quarter average of 1.5%, 12-quarter average of 2.3%. So you can see here that's 3.6% above the 4-quarter average and 2.7% above the 12-quarter average. So that's how those straddles are currently priced versus historical actual moves. Let me see. Actually, let's take a look at Tesla.
Wow, Tesla's been in the news, huh?
Yeah, so Tesla's been that's just in the news. That pops up on my news, first thing every day is I see Tesla. So let's just take a look at historically what it's been, and right now it's just in kind of a different situation because there's lots of news, a lot of enthusiasm. So let's just see what happened in the past. And here we see here, this is the current. So these bars right here, these are the anticipated moves by the options market. So we see here, this bar up here, what it's expecting compared to the historical. So you could see it's much higher. We see here that it broke through October 23rd. It was expecting a 7.6% move. It made in either direction, made a 17.7% move. Here, broke out, was expecting 9% move, made a 16.2% move. So it's not out of the question, 15% moves here. Let's see to the downside, same thing, was expecting 6.9% versus a 13.6% move in the negative direction. I'm also going to take a look at here's how the straddles did. So here, the straddles, if you were long the straddle going into earnings, 50% of the time it was a winner, 50% of the time it was a loser, but on average it gained 8%, and that's probably because of some of these big moves over here. The long strangle, which is buying the out of the money put, out of the money call, that was a winner 33% of the time. Again, though, because of some of these big moves it created, that on average, if you did all 12 quarters, it was on average a 10% gain on that long straddle. Credit iron butterfly, that was only 27% winner versus 24% negative 24% return. So that was a loser. Credit iron condor, that's when you're selling out of the money call spread, out of the money put spread. That was a winner 67% of the time, but the average return was negative 6%. Again, that's because of those outlier big moves. Let me just take a look how the implied volatility looks versus historicals, and we see here that Tesla, on average, when we look at the 30-day constant maturity, so an option that's 30 days out, the average implied volatility crush, or the day when we take the implied volatility day before earnings and compare it to the day after earnings, after everything's released, it's declined by 18% on average. The day before earnings, the average implied volatility on that 30-day was 60.3. Day after, 49.2. When we go out 5 days after, it's been 50.1. These are strategies over here. We're just playing the implied volatility. So you're doing a calendar spread. We see that selling the near, buying the far, that was at the money, just calendar spread. That was a winner 42% of the time, but for an average negative return of 15%. So that was a loser. Same thing with the put spread, doing a diagonal, buying and at the money near term option, selling out of the money, far term option, that was a winner 42% of the time for an average return of 7%. And we could see here that heading into earnings, implied volatility on a 30-day, it was as high as 85.1, low 45.2. So that's kind of like, that's your 12-quarter range with an average of 60.3. The day after, the average was 49.2, as high as 74.9, and as low as 35.2. So that kind of gives you the implied volatility ranging in that options market. Remember, 30-day constant maturity. That's what we're looking at over here. With that being said, Will, do you want to get to some questions?
Yes, we had someone I've first seen, Arvid, on the show. He's asking, what happens during earnings if you own a stock and you place a covered, I think he meant call sale position, and the stock trades through the strike, your covered call. He wants a little options 101 from Dmitry.
So you're saying what happens if you sold a call and you own stock against it and the stock goes through that?
Yes,
that strike?
Very, very basic question. I just bringing it to you.
I mean, yeah, and I'm not sure. Maybe I think what he's getting at is like, does the stock get called away, or what happens to your position?
That is what he's asking.
So really, if the circumstances are that at expiration the stock is above that strike, that position, that call, you'll get assigned. So that stock's going to go away. So you're going to be left with zero. If that's your position at expiration. If it happens after earnings, but you still have 5-10 days to go, so nothing's gonna happen as far as like unless somebody exercises that call. But you could potentially just close out of it if you want to, or hold on to it till expiration. But at least earnings doesn't automatically create a early exercise or assignment. The expiration does, or potentially somebody who's long that call, if there's a dividend, or they want to exercise that call because it's really deep in the money, if they exercise it, you have a potential to get assigned and it goes away. But once it's in the money, at expiration, that stock will get called away. If you want to keep that stock, you would have to not have it called away. You'd have to close out of that call.
Now, on the covered call topic, someone is looking at silver, SLV, and gold, GLD, and wondering if there are any opportunities in there to look at some covered calls, what they look like.
Yeah, so we could take a look at, I was actually just looking at silver and gold, just the stocks this morning. We see here right now, even pre-market, it's indicating $19.67 versus 52-week high low. So it's already above that high 1835. So it does look, and we had actually that webinar about silver and silver mining.
Chris Marcus, he's great.
Chris Marcus, he's really good. Told us heads up, watch silver. He's been telling us about this for a while now, to watch the silver and the silver miners. And we could just take a look at the options chain. And usually what you see in these commodities, we see here, this is the option chain for SLV silver. These are all the months. So yesterday, and this is the interesting part about commodity-based securities, as they're going up, implied volatility can go up as well, because they're kind of like the reverse of what stocks are, because they're inflation driven, right? So sometimes you'll see gold or silver make spikes up. And here we're seeing yesterday the silver was up 2.9%. And here in all the expirations, we see the implied volatility increasing. This over here is the change in the implied volatility in the green. As far as like buy rating, and by the way, when I mentioned, why you would want to, if you have a covered call, why you would want to buy back that call option is if it's in the money, and sometimes people own stock for a long time. and they'll buy right it, right, to try to make extra yield or protect themselves against the drop. If you own it for a long time and you do a buy right, it gets called away from you, that triggers a taxable event, right? Because your stock, it's like selling your stock. So in certain circumstances, when you're doing buy rights and you don't want that stock to get called away or create a taxable event, that's why you would just want to buy back that option and hold on to that stock. So I know, some people like own Apple forever, Apple or whatever, own forever. Sometimes they'll buy right it, but they don't want to get called away. So they'll buy back in a money call. Here in the silver, I'm on 24 days out. And see here, this is the interesting part here. You see the skew. So this here, in the options, we see the implied volatility per option. And this is that, the money 29. We see that the implied volatility is increasing as you're going up in strikes, which is usually for stocks, or you'll see in SPY, it's the reverse when you think that the market going up is more orderly than going down. Here you see the reverse. So that's just an observation over here. I think Chris talked about that as well, that on the way up, you could really accelerate. And I'm just looking here, a lot of stuff is trading. August 21st, 66,000 contracts trading. January 15th, 2021, 57,000 contracts trading. And if you're looking at it, you could do, if you're looking at it to, I'm not sure what they're looking at to play long or buy right, but just depending on what you're trying to do with it.
It sounds like they're owners and they're interested maybe in looking for extra yield. Okay.
So that's how you would just start looking at it and saying, well, where do I think, is a target price I don't, I'd be comfortable selling because I don't think it's going to go above it, or if it does, like, I'm out. And then you'd have to kind of look at the yield and determine that, because that's a different type of strategy. When you own it, the stock, it's more of a personal preference, like where would I want to sell it, where would I feel comfortable, and how much yield would I get for it, so that's really like where you have to kind of determine from that options chain if there's enough premium for you, and do you what is your target on that stock, and you really have to kind of decide that for yourself.
There you go. Someone wants you to take a look at the earnings the next 2 weeks out, see if anything jumps out, any big names.
Yeah, I think we just did that. Yeah, let's take a look again.
I think they want to look at the whole calendar, maybe.
Well, over here, this is where it's lined up, where this is the next 2 weeks. So that's how you would look at it. So this is like really the next 2 weeks. So if we're looking at big names, let's just say contracts that traded over 5,000. Let's look at, I don't know, like over 200 billion, like really big names.
Sure.
So over here, we see it, out to August 4th. We see Microsoft, July 22nd, AT&T, July 23rd, Intel, July 23rd, aftermarket close, Verizon, Visa, PayPal, Pfizer, Facebook, Comcast, Procter & Gamble, July 30th, MasterCard, Google, Amazon. So really Apple here, July 30th.
All the big tech ones.
So all the big tech ones are coming up. Let's take a look at here, mega caps. I'm going to go here to the summary, and let's see in the last 2 weeks. These are the mega cap stocks that reported in the last 2 weeks. So we see Netflix, Bank of America, Johnson & Johnson, JP Morgan. We see like here's the actual move. Netflix was down 6.5%. That the implied move heading into it was 7.8%. So you see it didn't make an outsized move compared to the implied. Bank of America, that declined 2.7% compared to an expected move in either direction, 4.8%. Johnson & Johnson, that had a pretty muted move, 0.7% versus 2.7% expected move. JP Morgan, 0.6%, was up 0.6% versus an expected move of 6%. it moved 0.6%, a fraction of 1%, versus an expected move of 6% in either direction. So at least right now, we don't have a big sample here, but those mega stocks, out of the 6, 4, out of the 6, here's a couple more: TSM, UNH. Out of the 6, 4 of those, after earnings declined, two of those are 33% advanced. The straddle, if you own the straddle, all 6 of them, they were losers for an average return of 44.5%, which is telling me that at least out of these 6 situations, all those straddles overestimated the move. Again, this is a very small sample. We're heading, we're going to be heading into a lot more earnings. So that's really a quick observation, at least for those mega cap stocks. And here they are over here, those mega cap stocks here: Microsoft, Verizon, Visa, Facebook, MasterCard. We see here, these are the implied moves using today's straddles. And this here is telling us that these so far are anticipating or estimating higher moves than their 4-quarter average. This is comparing to the 4-quarter actual moves, 4-quarter average. Hopefully that's helpful.
No, that's super helpful. Any other questions out there, YouTube subscribers? Listen, make sure you subscribe to the YouTube channel, and liking us is always nice. That's helpful. Also, Dmitry and I are going to be having a webinar with Jay Soloff, who was a market maker on the CBOE and a very interesting guy, options trader, options mentor, tutor, or whatever. He's a very interesting, good guy who uses the Chameleon. He does uses it for unusual option volume, for looking at vol skew, all sorts of different things. But he'll be on with us tonight at 8 p.m. I put a link on there to register. Last chance for any questions. Or Dima, you have anything else you want to talk about?
Yeah, no, I think that was a pretty, I try to wrap it up pretty quickly, go through to leave questions, but if no questions, that's fine.
Can we take one last look at the pre-market, see if anything's maybe changed? Can you bring up that screen?
Sure.
This pre-market feature that was created is absolutely.
Yeah, so I see here a few new names. Let's see this one. Looks like another, biotech stock, but that's 25,000 shares so far traded in the morning. Here's some, let's just look at if there's any more bigger names, let's say over 10 billion. These were more of the small cap stocks. So I see silver, up 5.8% now. See, this is on 23,000 shares. This is IBM's up 4.8%, Halliburton 4.5%. NIO, that makes the list a lot of the days, up 4.1%. Coca-Cola, BABA on the list, 3.3% each. So
BABA is pretty interesting, actually. They're spinning off, or they spun off Alipay before their IPO, but Jack Ma owns it. And with all that's going on between China and the US, they're about to basically IPO it in Hong Kong. And it may be the largest IPO ever, which is amazing.
Yeah, that's going to be exciting.
Yeah, it will be. All right, everyone. That was the morning show, day 5. Thanks, everyone, for joining us. A special thanks to Mike from Texas, longtime Chameleon, and Brian Bolin, who was nice enough to join us and send a shout out. D, a lot of positive feedback today. Thanks again. Remember, everyone, we have the show tonight. Subscribe to our channel. And any parting words, Dmitry?
No, thanks, everybody. Happy trading day. Hope you have a great trading day. And hopefully we'll see you tonight.
Stay safe out there, everyone. Good. Have a great day. We'll see you tomorrow morning.
Thanks,
and
everyone.
tonight, hopefully. Bye-bye.
Have a good night.